Most traders make this mistake without realizing it. They give too much meaning to one trade. One winner makes them feel like a genius. One loser makes them question everything. And that's why they keep spinning their wheels, trapped in emotional highs and lows that sabotage consistency. But here's the truth. One trade means absolutely nothing. Welcome back to Trader's Audio Edge. Today we're going deeper into the probability mindset by breaking one of the biggest illusions in trading. The idea that any single outcome defines your future. It doesn't. The only thing that matters is how you perform over a series of trades. Mark Douglas explained it perfectly in Trading in the Zone. Wins and losses are randomly distributed over time. That means even if you have a strong edge, you can't predict whether this trade will be a winner or a loser. You might win 3 in a row, you might lose 5 in a row, and both outcomes are completely normal. The key is that over dozens and hundreds of trades, the probabilities tilt in your favor if you consistently apply your edge. Think about a professional poker player. They can have pocket aces and still lose a hand. They don't quit the game when that happens. Why? Because they know that across hundreds of hands, their strategy will win more often than it loses. That's the difference between amateurs and professionals. Amateurs obsess over one hand. Pros trust the series. In trading, you must do the same. Here's what happens when you don't embrace this truth. You start overreacting. One bad trade makes you abandon a strategy that works. One good trade makes you overconfident and size up recklessly. You're no longer trading your edge. You're trading your emotions. And emotions don't have a probability structure. When you truly accept that one trade means nothing, everything shifts. You stop feeling like every entry is life or death. You stop tying your identity to whether you're right or wrong. Instead, you focus on execution. Did I follow my plan? Did I manage risk properly? Did I take the setup without hesitation? Those are the real questions that matter, because they're the ones that compound into consistency. And here's something else to notice. When one trade doesn't define you, your emotional swings start to smooth out. You're no longer on top of the world after a win or crushed after a loss. You develop balance, and that balance gives you the mental energy to keep showing up. Trading becomes less of an emotional roller coaster and more of a professional routine. That's where consistency begins. Another shift is how you handle streaks. A string of losses no longer feels like proof that your edge is broken. A string of wins doesn't tempt you into recklessness. Instead, you see streaks for what they are, natural clusters in a random distribution. This perspective keeps you grounded, preventing overreaction and keeping your account safe from emotional decisions. The freedom that comes from this mindset is hard to overstate. Imagine placing a trade and not caring about whether it wins or loses, only caring about whether you executed correctly. That freedom is what allows professionals to trade without hesitation, without self-doubt, and without tying their self-worth to the market's randomness. It's the foundation of psychological resilience. Every trade is just one line in a much bigger story. If you zoom out, you'll see that no single line decides the ending. It's the collection of choices, the repetition of discipline, and the patience to let probabilities play out that write the story of a successful trader. So here's today's reminder. Don't let one trade make or break you. Don't celebrate too much. Don't despair too much. Keep your focus on the long game. Because in trading, the only thing that matters is how you play the series.